Well, thanks so much for joining us for this edition of Making Sense, where we talk about our finances, our financial institutions, the current trends, and what's on the horizon as well. We're joined now by Justin Wolf from Forest Area Federal Credit Union. Justin, thanks for being there. We are talking about being prepared for tax season. And if you're watching this live as we're doing this and you have a tax question, just drop it in the comments. We'll try to talk you through and get you some answers. Justin, it's tax season.
Yeah, some of us love it, some of us hate it, and then there's a bunch of us in the middle, like same old thing, just another task on the to-do list. But it can take many forms, and occasionally through a lifetime, your feelings about this time of year can change.
Yeah, if you have an accountant in the neighborhood, this is where you don't see them for a while. They're busy. They're busy. This is their busy time of the year. All right, so let's start with the very basics. When is the tax filing deadline?
Well, most of us, I think, are familiar with the state. April 15th. That's the big day that everybody needs to know about. For most of us, personal tax returns, that's the date you're going to want to hone in on. Generally, they're due by the end of the day on April 15th. This year, April 15th falls on a Tuesday, so it's a regular, ordinary business day. If and when it falls on a weekend or a holiday, generally the IRS issues an extension to the next business day, something like that. So year to year, keep an eye on it. But if you prepare and plan on April 15th, and just to avoid any hiccups, plan on getting it done at least a little bit ahead of that date, if not well ahead of the date, you'll be safe.
And I think we're going to circle around later on why it may be advantageous to go ahead and, I assume, why it may be just go ahead and take care of that. Don't treat it like the sixth grade science diorama and wait until the night before to start doing it. We'll touch base on that later. All right. So if somebody is just like, okay, it's mid-February. I want to get on this. This year I'm going to be different. It's like flossing with the dentist. Like, I'm going to do it this year, right? I'm going to get ahead of this. What documents do we need to gather before even considering filing?
Well, it's going to depend on each individual's case,
right?
And as to what all you may need to collect. But for most of us, there's a general group of documents that you want to think about getting. Now, for 2024, those are the taxes you need to file by April 15th this year. If you didn't have an organizational structure for 24, you're just going to have to batten down and get those documents around. But for 2025, we're early in the year. Now is a great time, if you don't have it already, choose an envelope or a file folder, file cabinet, or an electronic file on a safe, hopefully secure, protected device to save these documents throughout the year. Many of them don't come out until the end of the year, right? But there are other things you may want to think about keeping throughout the year. So end of year documents that everybody should be in receipt of by now is your W-2 form, that IRS W-2 from your employer. If you're a freelancer or a contractor, it might be a 1099 form, but this is that summary of income for the year. If you have multiple jobs, you're going to have multiple of these documents. So you're going to want to report all of those, because any income that's reportable is going to be reported on this form. So make sure if you have more than one job, you're getting those. Other things that you're going to want to have handy are bank and investment statements. Think about any accounts that you've earned interest on over the year. That is reportable as income. On the opposite side of interest that you've paid for your mortgage, for example, you're going to want to have those numbers. There are tax forms associated with these. Also, many financial institutions will include a summary of these numbers, the interest you paid or the interest you earned on your final December statement from that financial institution. So another reference point, but definitely look for those official tax forms, usually a 1099 INT for interest, that's interest that you've earned, or a 1098 form for interest that you've paid. Now, getting into documents that you may want to collect over the course of a year. Receipts for deductible expenses, okay? Medical bills, charitable donations, education costs. These are all things where if you have that file cabinet or an electronic file to store them in, it's going to make your life easier come tax preparation time. And then finally, I'm going to recommend that our viewers know where last year's tax return is. In this case, the 2023, right? This can be really helpful. We're going to talk later about how do you get your taxes done and filed, but this document, the prior year or year's documents, can be helpful in completing this year because you can look back, you can reference it. If you're switching tax preparers, it's also great, and many tax preparers, CPAs, offer this service to review the prior tax years. You know, if you're making that change and if you have somebody helping you, they can review the prior years. That can help them better understand how you filed in the past. And sometimes they'll do a review of those and can maybe find if there was a mistake made or if there was something that you were eligible for but didn't take advantage of in the past. There may be something that they recommend doing with that. So having your prior year's taxes is a good idea to have on hand.
Yeah, two things. One, I incorporated the big manila folder that goes in the drawer, and whenever anything comes in, I'm like, that looks taxy. I put it in that folder. That is super helpful because you always end up having to contact a couple people to get some forms. But if you have at least the ones that are mailed to you there or the ones you can print off from work, that's super helpful. And cannot recommend enough the importance of going back through last year's file, last year's finished, return, and being like, got it, need it, got it. And again, if something major in your life changed, those may not be as applicable. You may, if you sold houses or had a life change or something like that, it may not be just cookie cutter, but that is very helpful for like, oh yeah, I forgot about that savings account that I got an INT form for. So I highly recommend both of those. All right. So how can you maximize the tax deductions and the credits that could save us money?
Yes. Now, this is probably a great opportunity for me to provide the disclaimer. I am not a tax preparer or tax professional. I'm not here to give tax advice, but talk with a tax preparer or a tax professional so that you can have a conversation about your individual circumstances. Now, generally speaking, the things that we don't want to forget about are retirement account contributions. Generally, these types of contributions may have a tax benefit. They may be able to help reduce your overall taxable income. So keep that in mind as an opportunity. Educational credits are another. If you own a home, there may be home ownership benefits. And if you have child or dependent care credits or expenses, those may be things to factor in and have on hand. Now, they may not apply in all cases. And of course, there is a long list of additional factors that may need to be considered to reduce your overall taxable income. That's where going to a trusted tax advisor comes back in. And then some of these, they may or may not play in depending on if you're taking advantage of the standard tax deduction versus itemized. But having the information on hand is going to help you or your tax preparer calculate it both ways and see which is the most advantageous way for you to go and stay within the IRS rules and regulations.
All right, talking about that licensed trusted tax preparer. My son and I had this question. He called me up. He's like, Dad, should I do my own taxes this year? And I was like, even I could probably do his taxes. They're very simple.
Right.
Very, very straightforward. It's like 4 numbers, boom, you're done to go. Is there a point, and is it different for everybody, where it's like, okay, I'm not going to tackle these this year. I'm going to go to a trusted professional. Take out I just don't enjoy the process, or I don't want to do it. But how do we decide, okay, I can do this myself, or I'm going to pay somebody in order to maybe get my return back?
Yeah, and that's a really great question that each of us really needs to take some factors into consideration in how we make that decision. In previous segments on other topics, all our viewers know that I'm a proponent of talking with a trusted advisor, seeking out the professional expertise when and if you need it. And I'll hold true to that, because there's definitely benefits to working with a professional in these matters. Now, with that said, if your individual situation is fairly straightforward, absolutely, individuals can file their own taxes. There's ways to accomplish this with little to no cost, or you can file yourself using the aid of paid software subscriptions. I mean, there's a number of big names out there that most of us are probably familiar with, and I will say some of them I'm very impressed with the level of self-guided support that it provides, and many of them offer additional human support beyond the self-guided. There's some excellent resources out there. So an individual doesn't have to be afraid to try and file their taxes on their own, especially with some of the tools that are available to us now electronically. There's ways to make it real easy, but measure your own comfort level. And there definitely is benefit to utilizing a professional or a service that helps double check you, because you don't want to get in trouble with the IRS,
No.
right? We want to try and do it right the first time. If we don't, it's not the end of the world. You can file amendments, you can do corrections. Sometimes the corrections go in your favor or not in your favor, and using a trusted professional or a guided service can help you minimize those possibilities. So again, comes down to a personal level of comfort as to how you want to approach that.
Yeah, I always weigh how bad is it going to hurt if I get this really wrong?
Right.
And I'm not pushing one way or the other, but you can shop around and find there are tax professionals that can do this across a spectrum of price ranges.
That's right.
So it is something to consider. All right. So we've successfully done our taxes. Everything looks good. And then one of the things, if you're getting money back, is how do you want this money back? And it feels like we've heard a lot of pushing for get it direct deposited. What's the benefit of having your tax return direct deposited?
Well, here's where I'm going to take a stance and say I recommend direct deposit. Okay. And there's two primary reasons. The first is it is safe, among the safest ways to receive your tax refund, and it's fast. Basically what we're talking about is the difference in an electronic transfer of funds versus getting a paper check in the mail. And the time that it takes to process one versus the other can be vastly different. Not only processing, but then for the check, the time in the mail. And then now there's tax preparing services that will offer an advance on a refund and stuff like that. Those are things for individuals to consider how that meets their needs best. But by and large, definitely I'm going to recommend that folks consider direct deposit so that it comes directly into their financial institution without the fear of loss or theft through a paper snail mail delivery channel.
Yeah, because I imagine that getting the IRS or a Treasury Department, whoever issues those checks, to get them to redo that is probably not a process that you want to tackle during the middle of tax season when those departments are already plugged up. And like we talked about in our last episode about scams, tax season is a big time for scam artists and people to take advantage. So if they know that checks are sitting in mailboxes, I see your point there. All right. So what happens if instead of getting that money back, which I think most people, general statement here, most people prefer that option as opposed to having to write a check. What happens if we do all the math, or the math is done for us, and we look at things and say, I owe, and I don't think I can pay this all in full? Is there help out there?
Yes, there's a couple of things to consider there. And now many of our viewers might find themselves in this position on a regular year after year basis. Others might experience it for the first time, where they get into a situation where they're in a different tax bracket. There was a
change,
a significant change in their life that resulted in this, and now they're paying in versus paying nothing or receiving a refund. A couple of things that you can look into. Often taxpayers will be eligible for a payment plan through the IRS, so definitely look into that as an option. Sometimes the IRS may authorize a short-term extension for receiving the payment. Often that's up to about 120 days. So you may be able to buy some time to collect the funds you need to make the payment. And then, there's also looking at, can you borrow the funds? Do you have additional funds sitting in savings? You could look to your financial institution for a personal loan, perhaps, to get the IRS paid and settled up. Definitely an option also. But there's three ideas if you find yourself in a situation where you owe the IRS that you might be able to look into.
Now, and again, disclaimer, I'm not a tax preparer. Justin, you're not a tax preparer.
Nope.
Okay. We still, though, if you've done the math at home and you looked at it and you're like, I got to write a big check, don't not file. You still have to file even though you don't have the funds, right? Still go ahead and go through that process. Is that the way you understand it works?
Yes. Yep. Definitely. Get that tax return filed. If you owe money, technically it is due with the filing. But if you find yourself in that position, just know that a few of those options might be available to you, a payment plan or a short-term extension, so that you can meet that and stay in the IRS good graces.
Yeah. Don't wave red flags above your head. So also, I imagine that one of the advantages of getting on your taxes earlier in the season as opposed to waiting till 10 o'clock on April 14th is if you do your taxes and you discover you owe money, you have some time between now and then to make arrangements for talking to your financial institutes, getting a loan, do some, maybe even you've got, 8 weeks, save the money up or something. If you don't have the money right now to write the check, but you at least know the number you got to get to by getting on things early, you're prepared for that. Maybe you don't book that spring break vacation and instead that's going to your taxes. So getting on it early. We hear about it, tax-related fraud. We've heard the encouragement of file early. How can we avoid, as best as we can, becoming a victim to tax-related fraud?
Well, like so many other things, stay vigilant. Keep an eye on your bank accounts. Keep an eye on your personal information. Keep that safe and secure. It is a time where people are thinking about tax preparation, so they get a phone call, they get an email. People are reaching out, and they're inclined to answer the questions that are coming in. Those are often potentially fraudulent. So first and foremost, do not share your personal information with anybody that's asking for it. Only share it with people that you make that first point of contact with. Make sure if you're using online services for tax preparation, make sure that they are in good standing, that there's somebody that maybe you've heard of or been referred to, rather than a link maybe further down in the search engine that you've never heard of, because there could be a chance that that's something fraudulent. Other fraud that maybe you wouldn't think about is a recommendation to file early, because there are fraudsters out there that will make attempts to file tax returns using your personal information.
Yeah.
So sometimes when that happens, we have people trying to file taxes and they get an error message in return from the IRS that says your return's already been filed. And that may be an indicator that your information was compromised and somebody filed as an imposter to you. So filing early can help reduce the possibility of those types of things happening. And then there are some safeguards you can take in addition to, making sure you're working with a reputable tax preparer or online service. The IRS offers an identity protection PIN number, another way, an extra layer of protection, so that when you're filing, when you're sharing that information, it requires that PIN as part of the process. to help keep your information safe and secure.
And just to squash anyone's hopes out there who thinks, oh, someone stole my identity, saw that I owed taxes, and went ahead and paid it for me. The con artists don't do that. They only take the money that people are getting in refunds. So they're not going to help you. Oh, well, we owe for this guy. Well, that's okay. Just go ahead and write. They don't do that, folks. They just take your money. All right. So what else do we need to consider as we prepare to file our taxes?
Well, take a moment and just think about what types of things transpired in your life in the year, in 2024, for example, because you're going to need to know this information or consider it or not forget about it when you file your own taxes or when you're talking with your tax preparer. If your marital status has changed, if you bought or sold real estate, especially if it's a primary residence, if your primary residence changed, these are all things that could impact how you file and the end result of completing that tax return. If you lost a spouse during the year, if dependents no longer became dependent, kids move out of the house, something like that, they reach that age, that time in their life when they're moving out, they're no longer your dependent. Or maybe your children are wage earners themselves. You're going to have to make a decision. Can your dependent that's living with you that earned wages, do you have to consider their income on your return, or can they file separately? All things to consider and think about, and just take account of what happened during that tax year. And then finally, I'm going to recommend, when you're doing your taxes, whether you're doing them yourself or using the assistance of a preparer, verify information and its accuracy. If you enter your Social Security number wrong on your tax form, that could create a problem. Okay. And even if you're working with your tax preparer, they're like, all right, what's your Social Security number? And you rattle it off. And for some reason, you get a digit wrong. That's going to be a little bit of a problem, most likely. So verify your address, verify the correct spelling of your name, your Social Security number. And then, of course, the numbers do matter also. When you're entering your wages, when you're entering your deductions and your expenses, get those numbers as accurate as possible. And of course, we should have the supporting evidence that says those numbers are right, even though we don't have to supply every single receipt for a deduction, for example, to the IRS. In the event that they ask you to verify it, you're going to need that information. So make sure that the numbers add up, make sure the numbers are accurate on your return. And that's going to help you have the most successful outcome in filing your taxes, getting your return timely, and having an accurate return.
All useful information. I love all of it. And maybe the last tip. So get on filing early. Don't wait until the 14th. Go ahead and start doing all this work. Double check your work. Talk to references. Make sure that the people that you are working with are credible. And if you don't like this process this year, get that manila envelope and be diligent throughout the year, collecting those receipts to Goodwill, Salvation, anything that's tax deductible. Think about your motor vehicle registration, all those things. Just have that folder ready to go so that next year you're not having to do the wild goose chase for all these documents at the last minute, right?
That's right. And you know what? If you really appreciate the work your tax preparer did, or if you did them yourself, I think a lot of tax preparers like chocolate chip cookies on about April 16th. Well, no. They might not be in the office on April 16th.
But say, you better drop them off before midnight on the 15th, because most of them tend to, but they are putting in long hours now.
They work hard.
They do work hard, and so we appreciate all of that, and it's nice to be able to just give your tax preparer a sheet of documents and be like, let me know what the damage is, and then bring them cookies. So Justin, great advice there. Hey, thank you so much. Good luck to everyone filling out their taxes, and we'll catch you in the next edition of Making Sense.
Good evening, everyone.